stream.
Oh, the first day that we signed up for Monday.com, our department was...
Good morning, everybody. Hopefully y'all are having a great Tuesday so far. Looks like my audio is working. And I just got an alert that we went above the mother of all trend lines, is what everybody is calling it. That started from the top of the bull market on 1-3 and has yet to cross above it. Taking a little bit of a break on 12-12, but it was immediately rejected by it. So everybody is watching this trend line. SPY actually made its way back up to positive 0.1%. I personally am bearish to neutral for the day. So we'll see if we actually do end up cracking that trend line. It does look like we're testing it this morning. I don't have any trades open just yet. But let's head on over to my handy dandy spreadsheet and then also open the Robinhood account. Good morning, Roddick. Good morning, Tashi. Nice Fisherman. Lil Nate, Samir, good morning. And Irfan, back again. Something is making me money. I'm not really sure what is driving the account. Maybe the gold call, the gold leaps is up a little bit. No, actually that's not what's driving the portfolio. Something though is moving us up. So I got some Bank of America leaps put options. BLK is starting to make its way back down, I guess. I have a put debit spread assuming that it's going to be under 730 by the end of this week. And of course I don't know what BLK is trading at because they don't include the price up here like they do for SPY, which is really annoying. But hi Eric, good morning. But yeah, let me take y'all to my analysis for this morning. So if we look at last week, it was a pretty rough end to the week for me personally. Both in my personal life and in my trading life. Lost 391 on Wednesday, 255 on Thursday, and then Friday I lost 64. Lots going on in my life at the moment, so probably gonna try to avoid whenever I have, too much going on in my life, because my mental state just wasn't ready for the trading days on Thursdays and Friday. But looking at today, the analysis that I have, I'm bearish to maybe neutral. The reasons that I'm bearish is because of the fear around the upcoming debt limit deadline, which supposedly is Thursday according to Janet Yellen. And McCarthy is trying to be the big bad true conservative, even though we know that conservatives and Democrats are both on the same side whenever it comes to spending more money and, putting our country in so much debt that it's ridiculous. So I don't believe that he's going to try to stop the debt limit from going up again. I think that he's probably just going to cave in, and debt limit's going to go up, just like it does every single year. There is the off chance that he doesn't. I'll be very shocked if that was the case. But if that does happen, that means that the U.S. ends up defaulting on its debt, which means that we get downgraded, and that means that other countries probably aren't going to want to borrow from us anymore. So that would put the U.S. in a world of hurt, and another incentive for McCarthy to increase the debt limit. But other than that, we have the 10-year Treasury rate currently at 3.54. It was 3.56 earlier this morning, and this is up from 3.51 on Friday. So that is negative for the stock market. Whenever the 10-year Treasury rate and in general Treasury rates go up, the stock market comes down because it becomes more expensive to borrow debt, which companies need in order to grow their business. And the reasons that I'm neutral is because the dollar really hasn't moved much. We don't have any economic data that's coming out today. We do have a Fed member speaking today. But then also, the odds of the 50 basis point rate hike for February 1st, I think is when the meeting is scheduled, has gone all the way down to 6.8% versus 22.3% as of January 10th. So 1 week ago it was more than 20%, and now it's less than 10%, which is kind of crazy that the bond markets continue to expect lower and lower interest rate hikes, and they're still expecting the Fed to start cutting rates in June. I think the bond markets are delusional, but we'll have to see what the Fed decides. Good morning, everybody. Yeah, so if we look at, this is 25 basis points, this is 50 basis points. They're expected to go, in the Fed, the last summary of economic projections, they said that they're going to go to 5.0 to 5.25 by the end of the year. And we have 1, 2, 3, 4, 5, 6, 7 meetings between now and the end of the year. So there is a chance that they do slow down to the 25 basis point rate hike for this month, for February. But there's also the chance that they don't, let off the gas pedal, or I guess the brakes, and they do go against the bond market. In that case, they haven't gone against the bond market in like 60 or 80 years, so that would be very chaotic for the market if that does happen on February 1st. Likelihood of it, very low, but it is a likelihood nonetheless. And then if we go out to June, does the Fed projections say that they'll cut in June? We'll see. So they're expected to go to 475. This was 5. If we look at this last week, I think it was expected at 5 last week. Currently, I guess, yeah. So there was a 36% chance that we were going to go to 5. Now there's only a 35% chance, but the odds of 475 went from 44.6 to 48. So decent climb, and the bond markets don't expect the Fed to go as high now at 475. Instead of what the Fed wants is at 5. So if we look at May, they're expecting the same. So they're not expecting any rate hikes between May and June. In July, they're still expected at 475, so they're going to keep it there for 3 months, according to the bond market, 4 months. And then they're going to possibly start cutting, according to the bond market, down to 4.5. So a 25 basis point rate hike, or 25 basis point rate cut in November. And finally, for the end of the year, they expect the rate to be either 4.25 or 4.75. So another 25 base point rate cut between November and December. They're expecting 50 base points of rate cuts, which the Fed said that they're not going to cut rates this year at all. So bond market seems to be on some hopium. But anyway, it looks like we got rejected by that trend line. We didn't quite reach it. We were so close. So very close, but weren't able to tag it. I'm thinking of opening a put debit spread based on my analysis that I showed y'all this morning. So we have the debt limit fears. The deadline is supposed to be Thursday. So I think I want to set a Thursday expiration put debit spread. And I want to say either 396 or 394. I could even do like a $2 spread. That might help. But let me see. SPY. You need the FOMC countdown. Gotcha. But yeah, right now we're trading at 397.70. And I think if they don't pass the debt limit over the next couple of days, there's going to be more and more fears kind of amplifying, and y'all know how dramatic Washington loves to be. So it's just going to sell off pretty hard. But in the end, the likelihood of them increasing the debt limit is like 99%. So all the political theater for nothing, really. Gotta love Washington. Is it Washington or Hollywood? Can't really tell. All right, so I'm looking at the 396 put debit spread, assuming that it's going to be under 396 by this Friday. Currently, this is going for 40. I think I'd rather set the expiration date for the 19th, so on Thursday rather than Friday, because I know that it's going to be a little bit cheaper. And if we assume that it's going to go under 396, I'd say that's pretty safe, quote unquote. So that one's about 10% cheaper. I'm looking at 37 cents for this put debit spread versus the other one was like 41, 42. So I'm liking that one more. Might be able to get it at 35 if I'm lucky with this, but Robinhood you never get lucky with Robinhood, it seems like. So I'm going to try to get it at 36, and I'd say the odds of it working out is very low because they always pass the debt limit higher. So there's only like a 1% chance that they don't. And given that, I'm only going to put down $300 in risk for this trade. So for me, I'm going to open 10 of these put debit spreads, assuming that we're going to be under 396 by Thursday. And right now they're going for $36 a piece. The speaker election drama was a joke. And it took them, like 16, 15 votes to get him in? It's ridiculous. Washington is a bunch of drama. Just opened a new SPY put debit spread. This one expires on Thursday, 119 at 36 each, and straight prices. All right. So my analysis on that one again. Debt limit fears should amplify over the next couple days before the deadline Thursday. Unlikely to actually how should I put it? Unlikely. Unlikely not to increase the debt limit. But Washington always loves to put on a show, which could create fear in the stock market. The next couple of days. I think I made the similar trade last year. And I really hadn't paid attention much to politics before. So I didn't really know much about it. But that trade, I think I ended up losing because I didn't know that they would just pass it anyway, because they always do. So we'll see. 396 isn't too bad, though. Right now we're trading at like 398, 399. We might try to retouch that mother of all trend lines. I feel like if we do, then that's going to be a pretty big deal. So maybe we could go long based on that too. And I would set the expiration date for like tomorrow or Wednesday. Let me check the economic calendar to see what's going on in terms of data coming out this week. I don't think we have too much going on. All right, so this is my nice little economic calendar that I just made for the premium Discord. We got Fed member Williams speaking at 3 p.m. today. Could shake up the markets a little bit, one direction or another. We got producer price index coming out tomorrow morning at 8:30, so this is an inflation measure based on production. We also have retail sales month over month, and then year over year, of course, coming out at 8:30 tomorrow morning. So maybe if production inflation is higher tomorrow, that could end up sending us down if that's unexpected, because we already had a consumer price index. So I would assume, based on the consumer price index dropping by it was 6.4 versus 7.1 the month before, there was about a roughly 10% drop in the consumer price index, which is along the lines of what we saw for the producer price index last month. So if we go over to the link for this, the producer price index is starting to kind of come down. This is the month-over-month reading. We haven't had a negative month-over-month reading since, looks like, September of last year and then August of last year. But it's been rising over the last few months. And if we look at the year-over-year reading, going back to the regular economic calendar, looks like another dull day for SPY so far. Yeah, so far. And that was part of my neutral analysis too. Like I'm either bearish or I'm neutral for today, and I think we might take on the neutral trade. Just based on this first 20 minutes of trading, not really going much of anywhere. I'll have to check the RSI. But so far it doesn't seem like much action at all. And there's no economic data coming out today, so likely not going to move too much unless Fed Williams ends up changing the market in one direction or another. But looking at this week and the year-over-year core PPI, this has definitely been trending down since April of last year. It was at 9.6 at the peak. And this has actually moved down significantly more, it seems like, than the consumer price index, down from 9.6 to 6.2, so about a 30% cut. And then the CPI, on the other hand, which was last week, I think on Wednesday, if I remember right, but I don't remember too well. Core CPI, CPI regular. Usually they trade like not trade, but like they go hand in hand. And the trends, this one ended up peaking actually in July versus the other one peaked in April at 9.1, and it's come down to 6.5, which is still way higher than the Fed wants it at 2. So lots of work to still be done to quell inflation. We'll see if we'll probably need more rate. I really think that we'll need 50 basis point rate hike for the next meeting in February. I think going to 25 basis points, it is what the Fed wants, right? They want to get to 5 by the end of the year. Right now they're at 4.2 or 4.0 to 4.25, so they only need like 75 to 100 basis points more spread across like 6 Fed meetings. So they could do it in 25 basis point rate hikes. But I think slowing down too fast, going from that 75, 75, 75, 75 to 50 and then 25 and then 25 throughout, I think that could possibly re-spark inflation if interest rates aren't going up as quickly, and it's going to delay the inevitable. And the inevitable is a recession. We're going to get a recession. That's just part of getting rid of inflation. You need to destroy demand. You need to destroy the money supply, basically, to meet that of the goods supply. So if the money supply gets ahead of the goods supply, then people have more money to spend on the same amount of goods, which means that prices are just going to keep going up. Are you bullish, bearish, or neutral in SPY today? Bearish to neutral. So far, it's looking like neutral at the moment. Based on the RSI, could potentially be bullish. And with that overhead trend line, that kind of makes it a little bit tougher for the markets to rally. But if it does end up breaking that, then that would be a pretty big deal for the upside. And you might even see like 401 by the end of the day. If we end up going above the trend line. But based on the news that I'm seeing this morning, it's more bearish to neutral. Based on the technical analysis side, I would say we're bullish to neutral based on the above 50 RSI. So I'm kind of tempted to go with the 401 call debit spread just in case we hit that. Just in case we hit the mother of all trend lines. And right now, looking at the 401, 400 call debit spread, they're only going for 30 cents, so they're cheap as hell. I wouldn't spend a lot of money on it, but I would put some risk on it, just in case. All right. Just in case we end up passing that trend line. Looks like I just got filled on those two. So 400, 401 call debit spread. Assuming that we're going to break the trend line. Right now it looks positive. But yeah, based on the news analysis, I would say we're bearish. Based on the technical analysis, we're bullish. So in the end, we might just trade flat. And I might get screwed both ways. Just opened a new SPY call debit spread. Expiring today. 1/17 is today's date. And I snagged them at 29 cents each, it looks like. SPY coming close to the quote-unquote mother of all trend lines. I think if it breaks, we could see a decent squeeze up. But yeah, we are deadly close to it. I got a notification saying that it did end up passing it today, but haven't quite reached it. But I guess if you look at different timelines, like if you look at the daily chart, or like the weekly chart, it's a little bit like you can see that it's passed it up on the weekly chart, but if you look at the daily chart, it hasn't passed it. That's kind of the finicky part about trend lines, I guess. You have to look at the days that you have. So if you're looking at a weekly, it's going to look different than that of a daily, and then an hourly chart, obviously, even more different. So, but we're coming close. $3.99 at the moment. I chose the 400-401 strike prices right now. Those call debit spreads are up. Actually, trading at the same price. So I guess I ended up overpaying for them. Not really surprised there. Not too surprised. Yeah, now they're going for 25, and I paid, what, 29 for them, so down a bit. Might trade the Iron Condor if we go back to like 50 on the RSI. Right now we're at 57. We got so close to that freaking trend line. And it kind of looks like we might have set a double top here based on this high on the opening candle, and then these candles here. We didn't get past that 399.1 mark from Friday, I'm guessing. Yeah. So might just be a flat day for us. I would assume, I don't know, if we want to do an Iron Condor, I would probably put it between 396 and maybe 400, assuming that we don't go above the trend line. That seems like a decent idea. And of course, I can't do the 400 strike price for the calls because I have the call debit spread. But let's see if I do the 401 strike price. That one's actually still paying like $15 in credit just for the call side. For the put side, assuming that we're going to be above 396, that one's paying about 15, so you get like 30 total credit out of this trade. No, actually only 26 in credit for that trade. Would I consider making a video understanding candlesticks? I could. I do want to make a technical analysis video. I don't really use technical analysis too deep. Like, all you see here is RSI, MACD. I don't even use MACD most of the time. RSI I just use to tell if a stock is bullish or bearish. You can usually tell just by looking at the charts. You don't need RSI per se. But, like, say I zoom into here. Oh, well, shit. Auto zoom back out, please. Like, you can tell this is pretty bullish, right? You have a higher high, another higher high, another higher high, another higher high. So, trend is up here. I will be making a video for technical analysis probably in the next couple weeks if I had to guess. I'm not really sure what's on the schedule for right now, but I think that's in the works. And I'll include like candle structure, price levels, trend lines, like this one, the mother of all trend lines, is important. Whenever I do trend lines, I like very significant ones, like, the mother of all trend lines, right? This one started at the top of the bull market, so that gives it so much significance. And another big significant trend line would be going back to like 2009, right, on the monthly chart. The bottom of the bear market in 2009 was a low of 67.10, and then we can draw it. Oh, well. So whenever I do trend lines, like, it's very long-term thinking. It's not like 2-day, 5-minute, or the smaller charts. It's usually on the much larger charts. And if we look at, I guess it would be right around here would be that trend line. We did end up dipping below it during COVID, but ended up bouncing right back. So this one, you can extend it to the right with Thinkorswim. Let's see, edit the properties. Right extension on. And we can make this green just to say it's a support versus this one is a resistance. Extend this one to the right too. SPY call debit spreads are gaining some value right now. Yay. I like making money. What is your credit spread strategy trading for SPY? See, we crossed that mother of all trend lines and it just flew right up. Looking at that 401.59 strike price, or not strike price, but price target for the upside. Let's see. Right now we're trading at 399.50. What is my credit spread strategy for SPY? Usually I try to get like 25 to 30 cents of credit for each one. And it has to be like a bullish to neutral or a bearish to neutral day. I usually go into it based on news. My kind of fault that I have is technical analysis, though. So if, I'm not looking at the technicals, like if I'm not looking at RSI trading at 70 right now, I probably would have, opened a call credit spread assuming that we were going to be bearish to neutrals today. But I can also consider, looking at that mother of all trend lines, we might pass it, which would trigger a pretty decent squeeze up, which is exactly what we're seeing in the moment. But let's head on over to Robinhood. Currently we're trading at 400, so these ought to be going for almost 40 cents a piece. They're actually going for more than 40 cents a piece. That's nice. I like getting more money. I ended up paying 29 cents for 8 of them, so right now I'm up $130 at the moment. It's going for 46. I think we're going to reach the 401 mark, but impossible to really tell. I do think that they could be a little bit overvalued at 47 cents, considering we're trading it just at 400. But I guess the implied volatility after breaking that mother of all trend lines is pretty high, which inflates the value of the options, which increases the spread. Let's see. Right now I'm up 120. Yeah, you saw a lot of volume flooding in as soon as we crossed that trend line. Everybody was looking at it. Everybody and their mother was looking at that trend line. Right now they're going for 39 cents a piece. I got them for a decent price. It's just whether we hold above the trend line or not. I would say considering the volume, we would continue to push. But doesn't seem like we're getting too much follow-up volume on that so far. I mean, it's only been, 30 seconds since this candle opened, so. Yeah, it doesn't seem like we're getting nearly as much volume, so we might not follow up with it. Still looking at that 401.59 mark, though. That would put our contracts at around 60 cents of value at least, which would be 60 minus 29, 31 times 8, like 250 profit versus the $100 or so that I'm making right now. Let me zoom in on the Tesla's up 6% today. What is the fundamentals telling us? 10-year treasury rate made its way back down to 3.5, so that's positive. The dollar is basically flat, which isn't positive or negative. It's neutral. Tesla itself is up like 6% today, so that's a positive for the growth market. Netflix is still down, interesting enough. $4 on a $300 stock, so that's like 1.25%. They have their earnings coming up on Thursday, and I want to trade that, but not ready for it yet. But looking at the other earnings for this week, we have United, we have Netflix, and then we have, there's another one, Schwab. Schwab, I think, reported this morning, if I remember right. Or no, they're reporting after hours today. Yeah, these call debit spreads are kind of in limbo at the moment. I guess 400 is also like a nice round number that the markets could get rejected at, or cross above or below, depending on if people are bearish or bullish at the 400 mark. I would say we probably don't deserve to be above 400, but we'll see what the market gives us. Still well above 50 RSI, currently at 69. So I would say that's a positive. All of the technical analysis seems bullish this morning. So I think I'm just going to hold it, follow the trend for the day. And if there's any news that goes against the analysis, against the technical analysis, then we might need to close. Putin says needs to control grain exports to ensure domestic reserves. So screwing with the supply and demand of grains, which is inflationary. Bank of America CEO said growth rate of consumer spending is slowing down. No shit, people can't afford to spend more money. Citi CEO says seeing a rolling series of country recessions, sees a mild recession in the United States. Okay. Call it mild, call it whatever you want. It's going to be a recession nonetheless. I was watching a video yesterday on the white collar recession is what they're calling it, to where the people that are getting laid off right now are the high skilled workers, like software engineers, electrical engineers, things like that get paid, hundreds of thousands of dollars. So obviously they're going to be the first to get laid off when companies don't have as much money to spend. And if we're seeing less growth, then those people are likely also to get laid off if we don't need as much new technologies and things like that. So white collar recession is definitely unfolding. Blue collar and, I don't want to call it low skilled labor, but like easier jobs like line cooks and things like that, to where you don't need, refined skills like programming. Those are likely to last a little bit longer. Their jobs are likely to last a little bit longer just because it's so much more affordable for the companies, obviously, and then it's affordable for the general population to go out and, go to McDonald's or go to some restaurant versus buying like a $40,000 Tesla. So, how's the BLK put? I think it's still down at the moment. I'm assuming under 730. Right now, BLK is trading at like 745-ish. Yeah, 749. So, not doing too hot on it, but we do have more bank earnings coming out this week, so they could trade in sympathy with others. And it's a 20-point drop from where it's trading right now, so 20 over 750 is like 2.6%, so it's not out of the cards. So I'm still holding it at the moment. The Wells Fargo one might be a little bit tough. I think that's like a 5% drop that I need for Wells Fargo to swing in the money. For the put option that I bought on it, that one, it's already lost basically all of its value anyway, so tough times. Betting against banks was not the best idea for earnings, but would have worked out Friday if I had taken profits. All right, we're getting close to that 400 mark again. So I think if we pass the 400, we go positive, but still stalling out right at that mark, right at 400. It's trying so hard to pass it, but there's just not enough volume behind it, it seems like, at the moment. Yeah, if not enough people are trading at 400, I think it's just going to get rejected. But could be wrong. I'm only up 90 on the trade. Right now they're going for 40-ish, which is about the right price that they should be going for. So I might close them at 40 each. I opened 8. I still don't want to go against the trend too, but considering that we couldn't pass 400, I think that's negative. Alright, I'm going to try to get out of these. I guess at 39 is the best price that I might be able to get. Alright. So a nice little small profit on that. Profit nonetheless, I'll take it. Probably could have gone heavier for it, but wasn't too certain on us crossing the mother of all trend lines today. Jesus Christ, they are doing some crazy construction across the street right now. Sounds like a war zone out there. Just took profits on the 400 401 called debit spread, expiring today 117 at 38 each. Originally opened at 29 each. Wait, let me make sure I got the math right. 312 or 8, 39 each, I should say. So $10 profit for each one, 80 total profit. What do you think of put debit spreads 401, 402 for today? If you're gonna go above the current strike price, I would say go with a call credit spread rather than a put debit spread. But that's just the way that I trade. So I was actually thinking about making that my next trade, possibly, depending on if we go below the mother of all trend lines. So I'm assuming that after getting rejected by 400, and if we go below the mother of all trend lines, then the rest of the day is going to be kind of bland, flat. Let me see how much that's paying now. It's probably going to pay more now than it will if you open it after the cross of the mother of all trend lines to the downside. But right now it's paying, oh wow, not paying much at all. Excuse me. So I'm glad that I got out when I did. Let's see. It's trading at 24 each for a 401, 402 call credit spread. I would probably want a little bit more credit for it, but if you go below the trend line, then I don't think you're going to get much at all. You're probably going to get way less. You're probably going to only get like 20 cents of credit for it. Come here for the trades, stay here to hear you gulping water. Water and coffee. Stay hydrated. Very tempted to do an iron condor now. But I feel like after crossing the trend line, it should be up. But not what we're seeing yet. That 400 mark is just too sticky. Too sticky for it. Let's say if we get rejected by 400 again, we open the call credit spread. Right now they're going for 26, assuming that it's going to be under 401 today. I don't know, though. We're only expected to go all the way up to 405 by the end of this week. So the odds of us going much above 402 seems pretty unlikely. But the odds of crossing the mother of all trend lines was also seemingly unlikely. So, kind of hard to say there. Yeah, we are just trading dead flat at the moment. It's like a 50-cent range that we're in. A little bit more, I guess. 400 down to like 399.46, so like a 55-cent range. Very, very tight. Let me zoom out a little bit. I feel like we're too close. The RSI, I don't know. I don't want to bet against the RSI. The RSI is still hot. 70 on the RSI, so it's overbought, but not a good bet. The Bank of America puts, I think they're down at the moment. Those are the Leaps options that I have. The Leaps put for Bank of America, they're down 400 at the moment. Strike price is 37. Right now it's trading at 34.5, so they're worth $5.70 a piece when I paid 720 cents each for 3 of them. Still think that it's going to work out. I still think that banks are going to have a tough year. Even though, they had such a great quarter, I think that it's just going to deteriorate more and more as the recession starts to kick in over the next 6 months or so. But looks like we just went above 400. So, well, no, we touched 400 again and got rejected. SPY is just having a really hard time with that 400 mark. All right, maybe we can increase our strike price now to 402, and that might be a safer trade to take on. That one's only paying $16 credit, so risk reward isn't there. But the 401, 402 is paying 27 now. I'm okay with that. I wouldn't put a lot of money down on it, though, just because of the technical analysis being bullish today. After crossing the trend line after the 70 RSI, I wouldn't go heavy for this trade. Like 100 or 150 max in risk. But then you only get like $50 in credit, so is it really worth it? Not really. So, not a trade worth taking in my opinion. But it just seems like we keep getting rejected by that 400 mark, so it's really just eating at me to go heavier. Let's see. If I put on 5, I get paid 150 for 350 in risk. I'm just not comfortable with that trade, so I won't take it. Sometimes the best trade is no trade. So let me log the trade that I made this morning on the January calendar, or the January log. It is the start of week 3, so we're going to make it in green and zoom out to the 50%. There we go. All right. So today's date was a SPY call debit spread, which is a bullish strategy. Whoops. Bullish. Expiration date was today, the 17th. Chose the 400, 401 strike prices. 8 of them. I paid 29 cents. And I got out at 39 cents. So, nice little $80 in profit. I am down for the month right now. $211. First week was good. Second week sucked, especially the end of the week. But starting off the week, okay, with $80 in profit. And that call debit spread is just eating away at my soul to open, but just gonna have to make no trade-off for it. But yeah, I guess that is the end of today's live session after logging my trades, and I will catch y'all tomorrow at 9:30 in the morning. See you, everybody.